We'd say the incentives are very, very different. The incentives on an insurer are to price that risk, understand the risk, price it in advance, to perform well over time, to manage the claim costs effectively, to only accept valid claims, to minimise the total cost over time of each claim through effective interventions, getting the stuff at the front end, whether it's medical treatment, rehabilitation, that will manage down the long-term costs of, say, weekly compensation. Efficient claims management, doing that as efficiently and well as possible, and efficient purchase of rehabilitation services. I guess what I'm saying is, in terms of this model, it has very different incentives. And in particular with ACC, to get the right balance between different entitlements such as treatment, rehabilitation and what's paid in weekly compensation, so that the total liability is as low as possible. And work count it's $2.2 billion, and the question for ACC from a management perspective is what can it do to get that number lower? Because that number basically goes on the Crown accounts, it's in the balance sheet, and the costs of financing that are a direct cost and very transparent. There's also some sort of bad incentives, I guess, on insurers to cherry pick risk, for instance, and when ACC was open to competition, that had to be regulated. Insurers were not allowed to cherry pick risk. Various mechanisms were put in place to stop them doing that, and that is important. The incentives are also sort of, I'd argue, different for those insured. Now, there's a question around who the insured is, who pays the premium, won't necessarily be the beneficiary. With ACC, there's the employer's account where the employer pays, there's the earner's account where the earner pays, motor vehicle account where the motor vehicle owner pays. But arguably, there's incentives on the person insured to minimise the risk of the event occurring. They might get a cheaper premium for it. To basically cooperate to achieve rehabilitation. An employer, for instance, providing light duties, etc. To not fully disclose relevant information, which is something the insurer needs to manage through disclosure requirements. And with ACC, we've seen a variety of risk-sharing agreements, such as the accredited employer scheme, discounts for injury, management practices, good injury management practices, to try and basically share that risk to increase the incentives, I guess, on employers in the workplace. Lessons. Conscious I'm getting close to being out of my 10 minutes. Full funding is absolutely critical. What it does is makes very, very, very transparent the economic costs of injury. In the case of the ACC, provides a number that the scheme basically manages against. That is something that we haven't got with welfare. It achieves a very, very strong focus on scheme performance over time. Sometimes performance is good, sometimes it's bad, but when it's bad, the spotlight turns on it inevitably. Makes transparent the benefits, costs of changes to scheme cover entitlements over time, and we've seen that in the last year or two. Assessing the effectiveness of different approaches to claims management, one can basically quantify what works, what doesn't, learn from it. Again, that number, transparency. And arguably competition in some form, whether it's underwriting or claims management competition, can sharpen the incentives. Importance of complete effective suite of tools. One of the most significant things that was done with ACC in the 90s was allowing it to directly purchase elective treatments from whoever. So rather than having to wait for a procedure for months, in some cases years, which could basically get somebody off, back into the workplace, save the money of the weekly compensation, ACC was given the ability to directly go into the market and purchase that when needed, and having those sorts of tools is important. Employer involvement in terms of workplace injuries is important. Multivariate analysis done on basically the workplace account clearly shows that employer involvement through accredited employer scheme or claims discounts basically improves outcomes. statutory, basically. The employer keeping an attachment with their worker rather than severing or breaking the employment relationship, providing light alternative duties, and very quickly, neutral dispute appeal provisions to keep everyone honest, the importance of good governance, and importance of prudential and market conduct regulation if competitively underwritten. That's me.